Good day, everyone. We're here in Investagrams and we're going to take a look at the global markets so that we know what to expect in the next 2 weeks to 4 weeks. All right, so let's begin with the Dow Jones. Now, first, you can see a short term ascending pattern here. It's not that scary because the trajectory isn't that steep, but what's critical is the index is approaching the main resistance of 26,000 to 27K. So you can see the Dow has tested this level for the third time already. So probably it's going to be do or die. It's either we break out of the 27 area or this becomes a triple top. All right, so it all depends on the overall sentiment of the market. Is there any potential driver for the US markets to be stronger? I think that's the main question. But the good thing right now is there aren't that much concerns globally. I think I think political tensions have been easing out a bit right now. So what's good is we may see this breakout above 27K. So let's just prepare for what's happening, what's gonna come out ahead. And I think as long as the Dow Jones is above 26,000, then we're good. All right, we can just place our mental stops below this level, and if it continues to break out, probably over the next 1 to 2 months, then we can see a potential trend to the 28K, 29K levels. All right. Now let's take a look at the dollar. Let's check out the US dollar index. So in the DXY, you can see a short term, hang on. All right. So in the DXY, the dollar was gaining some traction in the last few weeks. You can see a breakout here, right? But then we see the infamous retest. So coming to the 98 level, we see a retest. It's now dollar is now back to 97.5. Probably if the retest or the breakout is valid, this should hover above 96.50 to 97. So the retest should only be around at this area. Okay. And then if the dollar is really strong, we want to see the index to recover past 98, then tackle 100. So I think there would be something significant here if we break the major level, the 100. Okay, so in the next few weeks, we need to observe whether the retest holds, creates a support here, and then in the further weeks, we want to see a re-break if the dollar is indeed to be strong. Okay, but on the contrary, let's take a look at how the Philippine peso is performing against the US dollar. So in the past few months, past few years, whenever the dollar gains strength against the peso, the PSEI goes down. So right now, the PSEI is forming a positive consolidation, looking to break out above the 8,000 levels. But right now, taking a look at the USD PHP, it's good that it's weakening, right? But then it's nearing the potential support. So it's kind of correlated with the overall DXY movement. So the dollar is weakening a bit because it's a global thing instead of just being the peso being stronger against the USD. All right. So if the DXY gains strength and recovers, then this short-term correction for the USD PHP may be unsustainable. We may see that recovery again. All right. But of course, these things aren't really the only triggers for the rallies in equities. Currencies are just one factor of the whole aspect. Okay, so we're just looking at these factors so that we have additional clues. So hopefully, if we're bullish on the PSEI, we want the dollar to go down below 50. Okay, we want the peso to trade stronger against the dollar. So once we see if example the peso goes below 50, we see a breakdown here. If the dollar goes below 50 to the peso, then that would probably be a good sign for the Philippine equities. All right, so let's take a look at emerging markets. So this is EEM. This is the ETF representation of the emerging markets of MSCI. So you can see here, it's trying to made a double bottom here, right? And then now we're breaking above the base around this level. So that there's a short-term breakout. Actually, it hasn't broken out of the major resistance. So it's doing some small retests around this area, right? But the overall trend seems to be pointing up, right? Looking at this major trend line, so you can see here, trying to form a bottom. So what does this mean overall? There's a probability that there's a good sign that emerging markets as a whole may have bottomed out already. So if we're looking at EEM, we want from 43, we want this ETF to break above 45. So that's where we can say that hey, we have the confirmation already. And from there, we could probably see a stronger rally across the board on different emerging markets, right? So let's take a look at EPHE, the Philippine representation of the MSCI ETF. So this basically represents how Philippines is trading, but it's a basket of Philippine stocks based on the MSCI's allocation. So it's almost the same as the index movement, and it's very correlated with the EM as well. So again, we're forming the double triple bottom here. So it's a double bottom or a triple bottom depending on how you look at it. We don't have to really define it in a textbook manner, as long as we understand the essence. And then take a look at the structure here. It's just consolidating a bit, right? But then if the market gains strength, then hopefully we could see a breakout above the 35-36 area. So one thing to take note of if you're trading the Philippines is we've got a recent upgrade in the S&P. So I think that would provide a short-term boost in the markets. Property sector showing some strength. Reserve ratios in the Philippines are being lowered, or they aim to lower it. So these are potential, and inflation is also being well controlled. So these are potential catalysts that can push the market higher. All right. So let's take a look at some other emerging markets. Example, Indonesia, IDO. So it's the same. It's very similar to EEM and EPHE, except that the difference is it's a bit far from the breakout point, right? So from here we could have a slight observation on which markets are leading. Okay, so if I were to choose without bias, the Philippines ETF is more preferable than this one. Okay, let's take a look at some US stocks. Facebook, interesting. So we see a good recovery after the main scandals. So there's an exhaustion of the downtrend of the selling here, but it's cool. It's interesting to see these big gaps, right? We see two major gaps here, another main gap here. But then while the stock has recovered, and actually they launched a new redesign of their platform, and then they're now focusing on FB groups and then added services such as the FB dating feature. So let's see how this pans out. But again, if you're looking at the structure, there's a big gap resistance here, right? Since from this area around 215 to 180, there's a big gap before, right? But now we're filling around half of that. So from the 200 levels to the 215 levels, expect that this is going to be a tough resistance to conquer. Okay, take a look at Apple. Slight recovery, but again, let's take a look at the gap resistance, right? So the previous gap downs around this area became a significant resistance for the stock. Not sure about Apple sales, whether they beat their expectations or not, but looking at the technical structure, it seems that it's not that enticing at this point. Twitter, I think Twitter has been recovering a bit. Again, these US stocks are filling their gap resistances. So Twitter has a good recovery. We see a high volume breakout here, but it's entering the major 42-42.50 area. So let's see whether it can still sustain this move and create a higher conso and then have a re-break and not just fade on the resistance. Right? Let's take a look at Amazon, the Titan. Amazon, okay. That's a smoother trend in general. No weird gaps. So I think what we have to watch out is if this stock can create a base around 1850 to 1950, right? So we want to see it consolidate a bit, create some sustainability, then have a re-break, a strong breakout above the 2000 mark. Let's take a look at Google. Wow, interesting. So this one is different. While most of the tech companies are still trying to recover to regain their previous highs, Google has broken out of its recent high. So I'm probably gonna look deeper as to why Google is breaking out. So I'm not sure if we can check out the weekly chart here. Oh, the weekly chart isn't updated yet, so apologies on that. But for the daily chart, it's looking good. Okay, so let's take a look at last company, Tesla. Tesla, I think there's recent articles and videos on why Tesla is a short. So probably those prudent analysts or shorters are looking at the vulnerabilities of Tesla, financial vulnerabilities. So that's their main thesis on why they're going short. But let's see. Elon Musk is a very talented man. On the chart, we're seeing initial base support here, 230. But if Tesla doesn't recover above 270, 280 in the next probably 1-2 weeks, then we're gonna have a tough time on this. Okay, so let's take a look at some of the major currency pairs. Euro USD. So this is almost, if you look at the DXY, this is almost the inverse of the DXY, right? Take a look. So in DXY, showing a recent breakout with a retest. In Euro USD, it's showing a recent breakdown with a retest on the upside. Okay, so again, the question now would be the main thesis or the main direction of the market. If these retests fail, all right, so if this retest is really valid, if the breakdown is really valid, then we could probably see a weaker euro moving forward. So probably if the euro doesn't recover above 1.13, we could probably see a next visit to 1.10 after a few weeks or months. Okay, take a look at GBP. GBP is a bit stronger than the euro. You can see the difference, right? So at this point, it's mainly ranging transition. It's mainly in a transition phase with major resistances at the 1.32, 1.34 level. So you could probably range trade this, but without any significant catalyst, the upside is quite limited depending on the leverage that you're using. Probably you could have sell on spike trades, a few pips around 132, and then if there's any major rallies, then that's your overshoot at 134. Okay, all right, what else could we look at? Let's take a look at Bitcoin, BTC. So I think this is just the Bitcoin. Wait, hang on. here. So we see a strong bottoming pattern on Bitcoin, right? After a few months of slump, then it stabilized a bit on the 4,000 level. We see that valid breakout, but right now it's retaking the 5,500 area, 5,500 area. So from here, if this sustains, we could expect a potential breakout around the 6,000 area, but I won't be that bullish at this point because take note, you're in a major slump. So there's no significant catalyst yet on Bitcoin. So this may be just a reflex bounce or a short-term relief rally. Okay? At this area around this previous base point around 6,000 to 6,500 area, you could expect some weakness at this point. So that's my main bias. Even if we get a successful breakout in the short term, I'd be keen to sell on rallies any holdings on Bitcoin. Oh, I guess the other coins, the altcoins would have a different story, but Bitcoin on its own, I'm not that bullish. Okay, the upside is limited at this point. All right, so that's it for our global market session. I hope you enjoyed our video. If you want to learn about financial markets, the stock market, you could go to Investagrams.com or even download our app in the iOS and in the Google Play Store, I mean. So thank you so much for watching this video. Subscribe to our YouTube channel. So if you want to learn more about the financial markets, trading, how to invest, different psychological challenges of the market, feel free to be part of our journey as we trade the markets, learn more about ourselves and how to conquer and master perhaps the most challenging game in the world, right? The world of trading. So let's do it together here in Investagrams. Please like and subscribe to our channel if you appreciate our content. So that's it for today's video. See you again next time.